Hello and welcome to Banking Frontiers Live. We are bringing you a very interesting fintech conversation today with some of the biggest global leaders, which has been always the trend. Please join me in welcoming Mr. David Gyori, who is from London. And David has got a lot of feathers in his cap. He comes from the background of being the founder member of the World Fintech Foundation. He has also been in several panels to evaluate the innovations globally on fintechs. Apart from this, he has also been an expert trainer for bankers in the area of financial technologies, and he has been in panel for a lot of magazines and media related to the financial services sector. David, welcome to Banking Frontiers Live. A pleasure to have you.
Thank you. It's great to be here and share my thoughts. I am very much looking forward to our interview.
So, in 5 years, you see a lot of fintechs playing a very, very strong role, especially in the convertibility of currencies and global flow of funds. That is something, a new perspective that I have been hearing from an expert like you. That's a very interesting perspective to look at. So, what kind of ecosystems are now needed to catapult the growth of the fintechs to the levels that you are talking about, so that the governments, the accelerators, and the fintech groups across the world can work towards it.
Right. So, one of the interesting forces has been digital transition itself. Obviously, the cost of digital solutions is exponentially going down. This is what we call Moore's law, originating from the engineer at IBM. And Metcalfe's law, also known as network effect, meanwhile, is providing exponential growth of value in digital transition. These two forces, costs going down, value going up, are propelling this revolution basically. The big question is how traditional banks can participate in it in a meaningful and profitable way. And as I have been giving training programs to bankers in over 50 countries globally, my lesson has been very, very positive. Bankers want to participate in it, but banks are slow moving. So one of the key things to look for will be how this new financial technology arena will interact more and more and more and more and more with incumbent banks. There will be mergers, acquisitions, takeovers, initial public offerings. So the entire transactional market will grow probably radically within and around fintech. Imagine some of the large banks in the UK, from Barclays through HSBC to Royal Bank of Scotland or Lloyds, seriously tapping into the world of 70 plus digital only banks and acquiring them. There are amazing opportunities, and this post-COVID-19 environment will shake up the entire market. On the other hand, there will be reverse transactions as well. We are already seeing some fintech players, some newcomers, buying equity in traditional financial services. I am sure you have heard that Grab in in Southeast Asia, as well as Gojek in Indonesia, have taken equity ownership in traditional financial services providers. So look at the transactional market, and you will see a huge increase in activity in the coming years.
Excellent. So there is a reverse flow also, and at the same time, there is a forward flow when it comes into the fintech market. So there are new interesting ecosystems that are emerging in that entire thing. Any interesting role for the governments to play in promoting it? What kind of steps do the regulators and the policy makers have to take in order to promote this fintechs then?
Right. So there are three generations of financial technology. The first generation has been the pre 2008 generation. For example, PayPal started up back in 1998. The second generation of fintech has been the post 2008 generation. For example, TransferWise, 99% of fintechs belong to this second generation. The third generation of fintech is emerging in the post COVID-19 era. This third generation will be characterized by something new. This new thing is proactive, 100% compliance. The third generation of fintech, the post COVID-19 generation, will be totally different. This generation of fintech, the newcomers, will actively go to regulators and ask them to regulate their activities explicitly, and to regulate them strictly, and to regulate them explicitly. Why? Because when you are regulated explicitly, you can attract more investment. Your investors are 100% sure they are putting their money into explicitly, openly, transparently, fully compliant activities. So bear with me. There will be a 180-degree shift, and new fintech will ask for more and stricter regulations, and regulators will be absolutely prepared and able to go ahead. It will be a win-win. Explicit regulations will come to help digital identity in financial services. Explicit regulation will come to provide a more secure, transparent, and risk-free environment for mobile wallets. Explicit regulations will come to allow continuous biometric identification of clients and users in financial services. You know that there is a lot of talk about two-factor authentication. We will move beyond this. It will be a continuous behavioral multi-factor identification regime running in a fully compliant environment. Regulators will be the first to help every financial services actor in the world, probably, to open up fully compliant KYC, AML, CTF compliant bank accounts remotely. This is also one of the lessons from the pandemic situation. So regulation will be very important. More fintech regulation will come, a little bit less traditional banking regulation. Traditional banks in the United States, in Western Europe, are somewhat over-regulated as of now. And so this regulatory arbitrage will close, and fintechs and regulated licensed banks will have an equal field to play, and this is good for everyone. Meanwhile, some non-compliant activities within fintech will go down.
Non-compliant activities will go down. Excellent. Excellent. I think, David, that was a perfect kind of analysis of how you see the world of fintech and the fintech ecosystem. If I ask you in the last, what is your wish list as a fintech observer globally to see the world moving towards the next level of fintech acceleration and fintech adoption?
Right. What we need next, and what I wish to the world, is health and wealth intertwined. I want to see health and wealth creating synergies together. I want to see smart applications. I want to see smart financial technology and banking players linking medical health enhancement with financial wellness, wealth and health. It can happen through Internet of Things. It can happen through augmented reality, virtual reality. It can happen through insurance and bank assurance. It can happen through smart biometric sensors. It can happen through personal finance management dashboards. It can happen through robo-advisory solutions. There are many ways to approach this. This is what I wish to the world: health and wealth.
Thank you very much, David, for your wonderful interview. And we look forward to more such conversations with you in different areas, in each of these areas of neobanks, in cryptocurrencies, in digital currencies, and so on and so forth. And we look forward to keep engaging with you in the future. Thank you very much, David.
Thank you very much.